Hi friends, this is Saurabh Gandhi from Pivottrading.net. Today I will try and explain you one of the another important intraday trading techniques which is based on the Camarilla equation. Camarilla is basically a traditional way of trading in an intraday. I'm quite sure many of you would have already heard about it, many of you would have already been using it, and this technique is basically been used since ages in the stock market, not only in India but across the globe. And it is not something which has been invented right now. It has been in practice since a long time, since many years. What I'm trying to cover in this particular video or this particular webinar is uh, what are the special ways in which you should do trading using Camarilla equation. What I will try and explain you how at what time we have to take the levels, at what time we should calculate the levels, how we should use the levels, how we should take care of what is the price, what is the LTP, what is the average, what is the open price at any given point of time, and then how we can use those particular values to put to calculate the Camarilla levels, and based on those levels how we can trade intraday. Before I begin or before I dive into the exact usage of Camarilla equation, let me tell you or let me give you a small introduction about myself. For those who are viewing my video for the very first time, my name is Saurabh Gandhi. I'm basically a founder of Pivottrading.net. I started this website around 7 to 8 years before. I'm also the authorized partner, online marketing partner for Zerodha in Mumbai, online as well as the local Mumbai partners for Zerodha. Uh, Here are my few contact details. You can either text me or WhatsApp or Telegram me. I would prefer the communication either by text or by email. If it's very urgent, you can give me a call, but otherwise, I would appreciate if you can just drop me a text message on the WhatsApp or an email. I will try and revert you back as and when I'm free and as and when I'm available as and when it's possible to revert you back. Okay, so let's start. Let's see how we can use Camarilla equation. Okay, so now let's look into what exactly is the Camarilla and how we can get benefit out of the Camarilla for our intraday trading. Okay, so let me explain you what are the basic concepts of Camarilla. The very basic simple concept of Camarilla is we buy at low, we sell at high, we buy at breakout, we sell at breakdown. It is as simple as that. And because of these four simple concepts of Camarilla, this particular technique is being used since ages and still being used successfully across the markets, not only in India but across the markets. Maybe it's commodities, maybe it's Forex, maybe it's any international market. And because of this particular beauty of this particular equation, um, generally it is very difficult for the operators to fail this particular strategy. But the only thing is we should be knowing how we should use this particular levels or how we should use the levels to trade for intraday. If you can look at the picture which is below in this particular slide. So basically, any Camarilla equation, as I mentioned, these are the four concepts, that is buy at low and sell at high, and buy at breakout and sell at breakdown. So here, as you can see, the red color signs which is go short, which is at this particular level. So H3 is considered as the higher level, and there is one level which is again above it, which is called as the breakout level. So this is that we buy at this particular breakout, we sell at the normal H3 level. That is, we consider H3 as the high, a probable high for that particular script, and we consider H4 as the breakout level. So that is what I was trying to say here. We buy at the low, we sell at high, we buy at breakout. So here when we say H3 is nothing but the sell at high. H4 is nothing but buy at breakout. Similarly, L3 is buy at low, and L4 is sell at breakdown. So uh, so from here, from this particular picture, you can see what we do is the L4 L3 level 3 there are two levels at the bottom and the two levels on the upper side. So for the first upper level, we use that as a short. For the next upper level, we use that as a breakout. Similarly, on the downside, we use the lower level as buying and the further down level as the breakdown. Now to go ahead further, there are basically few rules for this particular equation. Now, as I shown in my as I showed you in my previous slide, in this particular slide, that there are 8 different levels L4 to H4. Okay. Now, based on these levels, we have defined few rules. Now, what does this rule say? Rule number one says that when the LTP is between H3 and H4. So when the LTP is here in this particular, you can see my cursor blinking here, H3 and H4. If the rule 1 says when the LTP is between H3 and H4, rule 2 is about when the LTP is between H3 and L3. Rule 3 says when the LTP is between L3 and L4. Rule 4 is when the LTP is above H4, and rule 5 is when the LTP is below L4. So let's go to previous slide and look this once again. So what I'm trying to say is there are 5 different rules, sorry. So the first rule is when the price is between H3 and H4. Second rule applies when the price is between H3 to L3, somewhere between H3 and L3. Third rule applies when the price is between L3 and L4. And fourth and fifth rule says that when the price is beyond H4 and L4 on either of the sides. So I will show you with an example how we can trade on all these rules. So let's come to the first rule. What the first rule says is that when the LTP is between H3 and H4, in this particular case, we consider H4 as the breakout. There is a long breakout, so we buy above H4. We become target becomes H5 and S6. Now, how H5 and S6 are observed or calculated, I will show you in a few minutes. Stop loss for this becomes the next lower level, which is L3 or H3 or H3 plus H4 by 2. That is basically a midpoint of H3 and H4. Similarly, so H4 we take it as a breakout, but at the same time we take H3 as the breakdown, or we take H3 as the sell level. So let me take you the first slide again. So what I'm trying to say is when it is between H3 and H4, we do a breakout at H4 and we go short at H3. So it is as simple as that. Now targets are different. So targets for the breakout is H5 and H6. Targets for the sell is L1, L2, and L3. So let's come to this first slide. So this when you sell at H3, L1, L2, and L3, this becomes the targets for the short. Now rule 2. What does rule 2 says? When the price is between H3 and L3. So when the price is between H3 and L3, we buy at the lower price, that is L3, and we sell at the higher price, that is as the H3. The next rule is L3, and if the price is between or the LTP is between L3 and L4, we buy above L3, that is at the lower level, and we use L4 as our breakdown level. Let me take you the first slide to explain it in a much better way. So here, when the price is between L3 and L4, what we do is we go long above L3. That is, we buy at L3 if the price is trying to move above L3. And we use L4 as our short breakout. That is, we consider it as a breakdown. That is, we enter into fresh short below L4. So this is a simple rule 3. Rule 4 and rule 5. Now this has some specialty. So with rule 4, what rule 4 says is if LTP is above H4, that is, it has open, or if the LTP, if the price is trading above H4, in that particular case, we suggest not to enter into a long because it is already at a very high level. So in that particular case, we say that avoid buying. But at the same time, if the price starts falling and if it comes below H3, then we say sell at H3 for the targets of L1, L2, and L3. And stop loss can be the H4 or the price between H3, somewhere between H3 and H4. So again, rule 5 is applicable when the LTP or price is well below the normal range, that is below the L4. So again, in that case, we say that since the price is already at a lower level, a very low level, we say that sell is not suggested. However, if the price retraces back, if the price starts moving up, then if the price moves above L3, we say that okay, by now we can go ahead and buy at L3 for a target of H1, H2, and H3, with stop loss acting as L4 or somewhere between L3 and L4. Now let me take you to the slide 1, where I can explain you in a better way what rule 4 and rule 4 and rule 5 meant. So rule 4 and rule 5, they were meant for the when the price is beyond H4 or L4. That is, if the price is above H4, so above this particular level where my mouse is blinking. If the price is trading currently above H4, in that case, we say not to enter a long side, but we can enter short below H3 if the price goes below H3. Similarly, if the price is beyond H4, beyond L4, sorry, if the price is beyond L4, that is on the lower side, then in that case, we say that we should avoid selling as it is already at a lower price. But if the price goes above L3, we will go long at L3. Okay. Okay. Well, so these are all about the rules. Now let's dive into the live examples. So now the common question is, how do I calculate the levels? I don't know the formula. How do I calculate the levels? So it's as simple as that. You can visit to my website. So you can visit to my website, which is pivottrading.net. Once the website loads, you can go to this particular calculator section. If you can look here once again, this is the calculator section. You can go to the advanced Camarilla section. This is a free calculator available here. Okay, well, so here it is. So this particular calculator gets open. You have to enter the high, low, and close of any particular script for the previous day, and you will get the prices. For example, let's say I enter some dummy prices out here. I do a calculation, and here is my calculation. So I get this particular levels. Now this levels H5 and H6 and L5 and L6, which I was talking in my video. So these are the levels, you can find it out here. You won't find this particular levels on any other website or any other any documentation about how these values are being evaluated or how these values are being calculated. So basically this upper two levels, H5 and H6 and L5 L6, this basically these values are used when we enter into a breakout trade or the breakdown trade. That is, if let's say we are buying at if you are buying above H4, or if you are buying on a breakout, we use these upper two prices as our targets. Similarly, if we are selling below H4, we are using the lower two levels as our breakdown targets. So this was one way of calculating the Camarilla levels. The other way of calculating the levels is it's automatically semi, which I generally also call as semi-auto trading, which with one just click you get all the levels for any particular NSA script. You can directly, based on the levels, you can directly place the orders into your Zerodha account if you have a Zerodha account with you, and it's so simple. It is as simple as one click calculation and the trade. So let me show you how you can do that. You need to come to my website again. You see here real-time mobile calculators, this particular menu. Within the real-time mobile calculators, you can go into the advanced Camarilla section. Once you enter into the advanced Camarilla section, you will see something like this. So here you get the real-time Camarilla levels based on whatever is the LTP or whatever is the price, and then you get these levels. So you can select the scripts out of here. You can click on the calculate levels. You will get the levels. You can directly click on the buy or the sell button, and then you can directly place trades. So this is an automated way, or basically just trying to save some of your time, some amount of your time. But if you want to do it manually, then yes, we can definitely go to the calculators page, the free calculators page, where you can enter the previous day values and find the levels. Now, having said all this, Now we know how what Camarilla is, what are the rules involved in the Camarilla equation, how we can enter, how from what all places we can go and calculate the levels. But now the most important thing comes is what is the technique, or how what kind of technique we should apply to get the maximum benefit out of the Camarilla equation. See, Camarilla, as I mentioned before, Camarilla is nothing new. It's been used since ages. The only important thing is what is the technique that is used, or what is the trick which you use for using the Camarilla equations. Okay, well, so let me tell you what is the basic technique which we should use for NSE, or for using Camarilla equation for the equities in the NSE for intraday trading. So what does this technique says, or what the simple approach which says is that for the first 10 to 15 minutes we should avoid trading. As I keep saying in all my strategies, or in most of my strategies, that we should not trade for the first 10 to 15 minutes. Now once the 15 minutes are crossed, so let's say at 9:30 or so, so between 9:30 to 9:40 you can take the average price of any particular script, and you will consider this, you will use this particular price to apply the rules. So first what we will do is, based on the previous day prices, you will calculate the levels, the Camarilla levels. Now you got the Camarilla levels, but now you need to check what is the LTP. But you will check this LTP or the average price. Now when I say LTP, it could be an average price or an LTP somewhere close to 9:30 or 9:40. So based on the average price, you will decide what your trade has to be. Okay, so now we know the timing of using the Camarilla equation. The best time to use the Camarilla equation is 15 to 20 minutes after the market has opened. Okay, so now this next question comes in. We know the timing. Now we know the timing as in what is the right time to use the Camarilla calculator. But now what script we should use for the Camarilla equation? Or or the basic question is, how do we select in which script we should do the trading? So here comes the technique part 2. Okay, so what we will do is we will go to nseindia.com. For the people who are outside India, I would like to tell NSE India is basically a website dedicated or hosted by the Indian Stock Exchange. So I'm just trying to explain the technique, or how we can filter out the scripts for trading intraday in NSE equity using Camarilla. So we will log into the nseindia.com. Now, within the live market, you will find this particular section called as most active securities. We will go to the most active securities or contracts, and we will find some list of scripts here. We will click on the value and not on the volume, because in the volume you will find only the low price stocks, which is less than 100 or 200 rupees. So we generally don't want to use them. We will take the active securities based on the value, and we will see. So here we will get the most top 10 active securities for that particular day. So the idea is, now we know the formula, the rule, the calculators, the timing, but now the only thing which was remaining was selection of the script. So the script has to be selected using this particular way, wherein we will go and check for the most active securities. So now since the market is closed, basically I would be able to show only those scripts which have been active at the end of the day, or which has been active for most time of the day. Okay, so when you come at 9:30 at this particular page, you might find some X number of scripts, but after few hours, those scripts might be changing. Mostly, the trend has seen that whichever scripts are most actively traded in the morning hours remain most active for the rest of the day as well. So generally, the probability, or the selection criteria is good if we follow this particular page. Okay, well, so let's assume that it is 9:30 a.m. in the morning, and we have arrived at the most active securities page, and we see the top most active security as Maruti. So what we will do is we will go on this particular script. We will go to its historical data section. We will look for the prices of the previous day prices. So actually the market today has been closed. So I'm not going to take today's price. I assume that the market is still at 9:30 in the morning, and I will take the prices. So we will take the previous day prices, that is of the 27th July. So here you can see that the important things which we need to note is the high, low, and close of that particular script on the previous day. Now I go to my calculator and enter all these prices. So here I note that the high is 4628. I will use my handy calculator here. So high is 4628, low is 4510, and close is 4558.15. So these are the levels. If you come to this particular page and enter the values, you will get the same levels. I'm just using for my handy purpose. I'm using this particular calculator for showing this particular demo. Okay, so here we got all these levels. Now, as per the rule, we go to our chart of Maruti. So here is Maruti for me. I open its chart. I open its any maybe 5 minutes chart or 15 minutes chart. You can open as per your convenience. I'm just trying to show what could have happened today using this particular equation. So as I mentioned, we will take the price of the first 15 to 20 minutes, that is 9:30 to 9:40. So as you can see here, this is the price at 9:30. Okay, so here the price is 4621, if you can see somewhere across to 4621, and the average price would also be close to 4620 to 4622 or 4621, somewhere close revolving around this particular price. So now my price at 9:30, average price is 4621. So now I will see where does 4621 falls in this particular levels. So 4621 is, if you can see, H3 is here and H4 is here. So 4621 falls between H3 and H4. Now as per rule 1, H3 and H4 rule 1, if I take you to my presentation here, the rules which I mentioned here. So this is my rule 1. What it says is, if the price is between H3 and H4, I have to buy above H4 and sell below H3. Okay, so let's see what happened. So here I have to buy above H3, H4, that is 4623, and I have to sell below 4590. Okay, so after 9:30, for some time, it was revolving in the same price range, and then at this particular price, after some time, the level of 4623 got broke somewhere around 950 or something. So as you can see, H4 was our breakout level. So we enter into a breakout with a target of 4650 and 4677. Okay, so here the breakout was happened, and our first target was 4650, which got achieved at 11 o'clock, somewhere close to 1050. And the next was 4677, which got achieved at around 1110. And then you can see what happened for the day. So this was an exceptional case, I could say, where it went well above 100 150 points. But generally the idea is we select with this kind of probable movement is possible when we are selecting the script from most active securities. That's the main advantage or main trick here of script selection. So this was how one of the script behaved. Let me take you an example of the second script, which is PNB. PNB is again one of the most active script for today. So I go into the PNB. I will follow the same methodology again. I will go to the historical data. I will check the data of previous days. Okay, so here on the 27th of July, the high, low, and close were this particular value. So I put them here. Let me take it here. So okay, so high for 27th July is 133.3, 128.6, and close is 132.80. Okay, so here we got the levels. Now again we will come to the chart. We will see. So here is the PNB. So as I mentioned, we would look the price at 9:30. So at 9:30 you can see between 9:30 and 9:35, 9:30 and 9:40 the price were somewhere around this, that is 132.89 or 132.90. Now let's see 132.90, where does it fall? 132.90, 132. So okay, so 132.90 is below H3 and 132.90 is above L3. So it is falling between H3 and L3. So let's see which rule applies here. So it is falling between H3 and L3. H3 and L3 is rule 2 applies. So what does rule 2 says? We go and buy at L3, we sell at H3. Let's see what happened. Okay, so as per this, H3 is 134. So we have to sell at 134 and we have to buy at 131. So after 9:30, the price started moving up. Tick, 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 tick. It went till 136. Okay, now what does it say? We have to short at 134. Now the important thing here is we don't need to short it blindly. The idea is if the price moves above 134 and then if it comes below 134, then we have to do a short. So in this case, the price went above 134. 134.09. So the price went above 134. So this is 134, as you can see. So price went above this, but then it did not return back. It didn't fell below 134. See, this is our line 134. After it went above 134 here, it did not came below 134 till this particular point, till 12:30. And once it came below 134 at 12:30, the sell is initiated. Sell is initiated in the sense we have to sell at 134. So now when the price at 12:30 falls below 134, sorry, yeah, 134, we can see what is the price movement it has done. In within next 10 minutes, it has reached till a level of 130 or 129.75. Let's see what our targets were. Our targets were L1, L2 and L3 because we shorted at H3. Our targets were L1, L2 and L3. So L1 is 132, L2 is 131, L3 is 131.5. And you can see we went till 130, 129.75. So all our three targets are achieved. Now again, as this particular price was between H3 and L3, we can again buy at L3, that is 131.5. But again, the same rules, we need to keep the same thing in mind. We should not directly go and buy at 131.5 or the L3 if the price moves below L3, and then if it comes again above L3, then we have to go ahead and buy. So see here. So here 131.5 with this particular level, somewhere around this. This is our level where we have to buy. So price went below this. Price went below 131.5, but then it came above 131.5 at only at this particular candle. So at this particular candle. So either on this particular candle our buy was initiated, but again if you look in the next particular candle there was a fall. So what we can say is in this particular case the buy which was initiated at 131.5, we got our stop loss hit here in the next immediate next candle of 5 minutes. So stop loss was at 130.21 because if we buy at L3, our stop loss becomes L4. So 130, so our stop loss got hit. But again, in the next candle, as you can see, it again broke 131.5. It again broke 131.5, and this time it went till the level of 133.5. So we bought at 131.5. Our targets becomes H1, H2 and H3. That is 133.23, 133.66 and 134. And we got till the level of 133.5. That is somewhere between H1 and H2. That is our first target at least got achieved again here. Okay, so this is how you can basically make benefit out of the Camarilla equation. But again, it's very difficult to predict whether it will go till a level till target 1, target 2, or target 3. So you have to adopt a strategy whether you have to book the profit at target 1 or target 2 or target 3. If you keep a strategy of booking the profit at target 1, then most of the time you will end up in profit for all the trades you initiate. If you keep your targets as if you keep your strategy as booking the target as target 3, you might not always be able to achieve the target, but in some of the cases you should be able to achieve them. So um, that's how this particular thing works. Okay, now having told you about the equities, NS equities, you can do your own a bit of homework, and you can try this strategy on paper for a few days, and then before you start investing your actual money or you start trading with your actual money, you can do some kind of paper trading. You can go to most active securities, and you can find out which are the top 10 scripts, and then do some kind of testing. You will come to know what kind of results it gives. Okay, so this is all about the NSE equities. Now the question comes, can we use it for commodities? Can we use it for Forex? Can we use it for currencies? So yes, we can definitely use it for currencies. We can definitely use it for other international markets and for commodities as well. So let me show you an example of one of the commodities. I've added two commodities here, USD INR and Euro INR. Okay, so again, in currencies, we don't follow any specific rule like most active currencies or something of that sort. We directly apply the rules. So the only thing which we take care of is we take the prices at 930 to 940. So we go to equity derivatives, we go to USD INR. So what we can do is we can go and look for the currency derivatives. So you can go to the live market, and then here you can look for the currency derivatives, and we can open one of the contracts. Let's say this is for the month of August. Again, here we will come to the historical data. We select the data of last few days to get the previous day high low close. Okay, yeah, so the now so the previous day here is 27 July, so it is 67.6925. Okay, so here we get the currencies level. Now there is one problem with this. The problem is this particular calculator was designed and meant for equities, but we are trying to use it for commodities. Now if you sorry, we are trying to use it for currencies. Now the problem is this particular calculator gives levels only the two till the 2 decimal points. The problem comes because in the currencies we generally trade with the four with the precision of 4 decimal points. So this normal traditional calculator won't help. So that is why you need to use a special Forex calculator for this. So you can come to my website, pivottrading.net. Again, you will see a section called as Forex calculators here. Within Forex calculators, you will find something called as advanced Camarilla. You can go there. Okay, so after you come to this particular Forex calculator page, Forex calculators advanced Camarilla page, you enter all these values, high, low, or close, and then you get the levels. Now, if you look carefully here, you get the levels for the four different for the with the precision of 4 decimal points. So these are more realistic levels. Now again, we will follow the same strategy. We'll open the chart. Now I'm showing you with the help of the chart because it's already the market is closed. But what generally you have to do is you have to just check whatever is the average price or whatever is the LTP at 930, 935 or 940, somewhere between that. So and then see where does it fall. So let's see at 930, 930, 935, the price is somewhere between 67.35, 67.3513, 67.3513. Now 67.3513. See, the L4 is 67.4. The price at 9:30 is 67.35, which is below L4. Below L4 means rule 5 applies. LTP is below L4. In this particular case, selling is not suggested. Buying is suggested only above L3. Let's see if anytime L3 was crossed or not. So what does L3 says? L3 is 67.4596. 67.4596. 67.4596. So okay, so 67.4596 is somewhere here. If you can see, for the entire day this particular level was not crossed. So uh, what I would say in this particular case is there was no buy generated, or there was no trade generated, because of this particular price at 9:30, the sell was never suggested and the buy was suggested only if the price goes above this particular level. And as you can see, for this particular entire day, the price did not went above that particular level. So no trade generated in this particular script. Let's take an example of some other currency, Euro INR. Okay, so let me take another example, Euro INR, for the August month. And again, I will go to the historical data. I will select last 7 days data. Okay, well, so here I have calculated the price for, or the Camarilla levels for Euro INRs. So as for these are the levels for the Euro INR. I have entered its high, low, and close as per this particular data. For the 27th of July, I have entered this particular data and I have got this particular levels for today. So now I will I will see the price of Euro INR at 9:30 to 9:40. So here what I'm trying to do is I'm opening its chart at 9:30 to 9:45. So this is 9:30, 9:39, somewhere 9:30 and 9:40. The price is 74.611111. 74.611111. So let's just confirm again. 74.6130, 74.61. So it is 74.61, 74.61. Okay, so again here 74.61 falls above H4. It is above H4. So again in this case, buying is not suggested because it's already above H4, but the selling is suggested at H3, that is 74.39. No, so on this, for this particular script also, the sell was not generated. 74.39 falls somewhere here, and the price never went below it. So anyways, this also did not work, but the idea is this is how you can use it for the currencies as well. Though the two examples which I took, they did not suffice. Let me give it a try for some other one more currency if we can find out. So GBP INR, let's say 20. So here, based on this particular data for the GBP INR, which is high, low, and close, I have got this particular levels. So again, I will try and look for the chart of GBP INR. Well, so okay, so these were the levels generated for the GBP INR, and this is the chart for the GBP INR. Again, at 9:30, when you look at the price, it's 89.06. This is the price, 89.06. When you go and compare here, 89.06 falls again at above H4. So again, the buying is not suggested, but selling is suggested. Selling is suggested only below H3, that is 88.64, 6649. If you go and look at the chart, at 88.64, 6649 was never hit, or it was basically hit only during the end of the trading session. So more or less, again, no trade was generated here as such. But the idea remains the same. You need to. It was maybe a kind of an exceptional day where, for all the three currencies which we chose, the trade did not got initiated or there was no trade triggered. But the idea remains the same. You need to select the script you need to calculate its level based on the previous day high low close. You need to take the price of that particular script at 9:30 to 9:40. Based on where does the price falls, you apply the rule and start trading. So these are the simple steps that you need to follow to trade using Camarilla. Well, so basically that is what I was having with me in this particular session. Um, or this was basically a technique which I was having with me uh, using Camarilla, a traditional way, but using the simple techniques that is more important here. So yeah, that's guys. Thanks. And yeah, before I say final goodbye, again, as I told in the beginning of this particular video, um, I'm associated with Zerodha as their partner. So in case if you're interested in opening an account with Zerodha, uh, who is one of the leading discount brokerage house as of now, you can text me on this particular number, or you can drop me an email, or you can drop me an email to saurabh@zerodhapartner.com, and I can assist you in that particular direction. Okay, so goodbye, take care. Hope you would have liked this video and you would have gained something out of this particular video, and wish you a happy and successful trading based on Camarilla intraday technique which I just showed you. Thank you. Bye bye. Goodbye.